The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Monday morning. We got about 24 minutes to go until the start of trading. You got markets picking things up in negative territory. Quite the week yet last week when you look at the charts, even on a 5-minute basis, man. You come into Wednesday action. Quite the acceleration on Fed Day, of course. You accelerate. We keep that acceleration higher to 42.08 on Thursday. We get the jobs number, man. Quite a jobs number on Friday. You look at the accelerations, folks. Pretty remarkable that within each day, aside from Wednesday, when it was a one-way trip to higher prices, but you check out the action on Thursday, two-way market. I'm zooming in on Thursday and just Friday of last week, right? You're talking about moves, folks. They're 40 to 50 points. I mean, check out the action on Friday's jobs number, right? You spike to 41.40. You're up to 41.90. Where do you close out the session? Pretty much right near 41.40. And where are we right now? We're below that price point by about 20 points at 41.19. We got a big week of retail earnings coming up. Earnings, etc. We got Disney earnings this week, among many others. NASDAQ 100, we're off by 0.9% right now. The Dow, off by about 0.5%. 33,801 in the Russell, off by 15 points. Back under 2,000, 1978. How about crude on Friday? From $78 to 73 and change. We're trading at 73.89. You're technically positive by 50 cents. Boy, I haven't seen a run like that, man. You talk about some moves in the price of crude, cheaper prices at the pump coming at you. Gold contract gives up $100 from where you were Thursday to where you were on Friday. Those gold bulls, man, if you're looking to get in the gold market, folks, my dad, he's got a new issue. Comes out every Monday for the gold report. Check it out, folks. I think this issue is issue 1085. Every single week for 1,085 weeks. And what is that? 1,085 divided by 52, that's 20.86 years of writing that gold report, folks. Check it out. You see the volatility, man, though. Quite a pullback on the gold contract. It's basically been a one-way trip from 1618 up to almost 2,000. And let's just see. Coming off these bottoms on the gold contract, even if we just grab 1950 in terms of that spike high, you're talking about a 382 that could get you down to about 1826, kind of the area that this chopped around, the upper boundary of the consolidation from about the beginning of December to where it broke out on January 3rd. So you had about a month consolidation from about 1800 to 1825, 1850 area. And you see gold pulling back $100 just like that. As most markets, folks, you take the stairs on the way up, and you take the elevator on the way down, man. Quite a drop in the price of gold. We'll jump over to the currencies as they matter, of course. And what do we got going on in notes and bonds, folks? We got lower price and higher yield coming at you, man. And we're talking about right now, folks, you're looking at a 10-year, 3.63%. Talk about a pullback, man, just like that. 3.63, the 10-year, off by almost 27 ticks right now. We zoom in on a 5-minute. Why not? Yeah. You talk about a drop-off on that jobs number, man. You drop from 115.19, and we are 2 solid points below where we were trading at Friday morning at almost this exact time, basically right before we got that jobs number, 8:30 a.m. on Friday morning. 30-year, off by a full point and 7 ticks, man. The 30-year is off basically almost 4 full points from where you were trading on Thursday. Remarkable actions in notes and bonds. We jump over to currencies. Dollar index. You talk about a run, man. 103.38. You see the action on Friday. You see the lows on Thursday of about 100. We take a look at this thing on a little bit of a longer-term perspective. It's been a one-way trip, man. Maybe this is where we get a little bit of a bounce on the contrary. 103.37. You know, those are some decent bars, man. We haven't really seen a spike like that since we've been falling off, basically since November 4th, man. You're talking about November, December, and January, 3 full months of a weaker dollar. And we might finally start to see that trend get pushed as we come into the first full week of February. All right, let's jump over to the VIX, man. VIX, we got to a level, folks, of, let me make sure I see it on my chart, 1706. Now, 1706, man. What do we got to get to get to 1706? Did we get there? Yeah, we had it. So the very beginning, for a day or two, at the beginning of 2017, we got to that level. You see, though, talking about for the better part of a year, flirting with the lowest volatility we've seen as you near, potentially, as many would hope or think, the end of a Fed hiking cycle. We'll see where we go from there. And I believe we have Chairman Powell even speaking this week. Now, he said what he wanted to say last week. We'll see if the market perceived what he wanted to say correctly, in his opinion. Pretty interesting. Right after he had his press conference, immediately, I was checking about Bloomberg, and immediately they were talking about maybe the market just misread what he was talking about. It's like, is that how we go? I don't know. Maybe we do. Maybe we do. Some of the headlines are pretty interesting in terms of where we're going here. Futures bonds drop on Fed outlook. Well, that was a little bit of the action yesterday, but how does that make sense? Because all the markets were doing last week was going straight up, man. And we had the Fed last week. Yeah, we got that jobs number Friday. It complicates things a bit. And that's where you have to make a decision as a trader, man, in terms of the debate that you can have in your own head. Okay, and this is what I'm having in my own head, is that is the jobs data lagging? We're adding over 500,000 jobs and have an unemployment rate that's a 53-year low. Is that lagging enough that some of the numbers that we're seeing that caused Chairman Powell, I mean, what was his exact quote? We can now see that the deflationary process has begun. Strong words, man, from the chairman. I heard those. Woof. Said he can now say that the deflationary process has begun. Well, the jobs market had something to say to that on Friday, folks. And that's where you have to make the determination of, is it lagging enough that the market can have disinflation, deflation, at the same time as adding 500,000 jobs, having an unemployment rate with a 5-decade low? Boy, that's a tough one, man. And we're going to see if it matters. We're going to see what happens in the coming months, man. We got a Fed meeting that's going to be here before we know it, man. I believe it's March 22nd and 21st and 22nd is the next meeting. The real interesting one, though, in my opinion, is going to be the one in May. And we got a lot of data that's going to come down the line that we figure out whether that matters in terms of, does that data coalesce with what the chairman was talking about, or does it coalesce with the jobs market that is practically heating up still? Yeah, pretty remarkable action. We got the China balloon. That's raging. China stocks set to drop. Let's check out some of them as we kick things off. Not surprising. Tensions on the rise. Alibaba, down about $3, man. You take a look at the action from last week. You've been sliding from about 114 down to 104 for Alibaba. Yeah, they're all going to be a little bit lower today. But, tensions rising. That's to be expected, man. The China tensions are just looming. They've been pushed to the back burner a bit because of everything else going on. But in more normal times where we weren't dealing with generational inflation, where we weren't dealing with the last 2 or 3 years, COVID, pandemic, etc., right? Any other time, man, some of the stuff that's going on with China, Taiwan, etc., would be much more to the forefront of political risks, especially after the weekend and the balloon and all that stuff, let alone we're seeing it pushed to the forefront a bit on this Monday morning. Stay tuned, folks. We'll be coming back. We got the markets right near the lows right now. We got the S&Ps down about 0.8%. We got the NASDAQ 100 off just more than 1% to kick things off. Quite a week for the earnings last week for the big tech. Held up pretty well. Amazon got slapped, man. Well, coming back, folks, we'll be talking about some of the companies this week. And today, I think we got Activision Blizzard, Pinterest. My man Duncan Steve in the den pushing it out. Stay tuned, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now down about 30 points. NASDAQ 100 off about 128. If you saw the news overnight, man, send some white lights and prayers over to the people. Man, in Turkey, in Syria, you're talking about quite an earthquake, man. Just watching some of the headlines this morning, the numbers are probably going to be pretty staggering in terms of the number of people dead, injured. They're talking about 1,000. I saw 1,500 in another one. Largest earthquake in 100 years somewhere that they're talking about. And the last time this happened, like 33,000 people that died in Turkey or something like that, jumping around to some of the headlines. But, man, some of the images coming out, tough, folks. You wake up, you realize how precious life is on the other side of the world right now. There's a lot of people going through, man, quite an instance. Can't overstate in terms of what they're going through. So send some prayers, some white light over there, man, because you're going to see the headlines persist, and I imagine, unfortunately, you're going to see that number rise dramatically. Seeing some of the images, and I'll see if I can pull them up later, just check them out. Just buildings demolished everywhere on a 7.7 earthquake. Yeah, in Turkey and Syria. Yeah, tough one for sure. All right, where are we going to jump around to? Let's jump to a little Dell. They were talking a little bit of Dell in the Tiger's Den this morning. Dell going to cut about 6,650 jobs, battered by plunging PC sales. Going to be the lowest headcount since 2017 after the reduction is complete. And yeah, you got some of the other companies that are their competition cutting as well. And you're talking about 6,650 in terms of that number. And yeah, you can see in terms of their headcount, right, where they were, you see the rise to 165,000. Amazing that they peaked out coming right into COVID. Seems like they were pretty well positioned there. And market gets a little bit of a pop, as has been the case recently. Yeah, look at that, man. So you come into 2020 at 26 bucks. You dive down with the market to 13, and they had the head count. They were well positioned to capitalize off of the run in PCs. You run to 61 bucks with the market, and just like that, you give up a 50% return. Pretty remarkable, right? In terms of how many stocks pull back to a degree. If you're ever in margin, folks, so many people getting wiped out in margin on companies that you never think could have maybe a 50% pullback across the board. Okay, let's jump to some of the companies that got numbers this week. What do we got? We got Activision Blizzard. I believe they are after the bell today. Let's jump around on a short-term chart. So trading lower with the market right now at about 73, 76. They have a lot going on, of course. For Activision Blizzard, Microsoft trying to take them out. Looks like they're going to face some regulatory problems. Nonetheless, you got Buffett buying quite a position here, making a play that he thinks the deal's going to get done. You jump over to the Analyze tab on the Thinkorswim platform. Now, probably a little bit less volatility than maybe as normal with that buyout looming, but you're talking about a $4 move for a $75 stock, and yes, their earnings are coming out tonight. What else we got? We got Tyson Foods coming out tonight, potentially. Yeah, you're looking at about a $3.62 move on a $64 stock price. Folks, if you're not familiar, this number I'm talking about up here, market maker expected move in the yellow. The way this move is calculated, okay, we've had our man Kevin Hincks on here many times. He talks about it, talking about where we are. And the way it's calculated is when you have an implied volatility on the front month that is greater than the implied volatility on the next month. That is telling you that there's some type of event occurring. It takes the implied volatility of that event and it says, listen, for the weekly options expiring February 17th. Now, this is an important quick lesson here as well, folks. Tyson, they're not traded enough to have weekly options. They have monthly options, all right? So you want to play their earnings. I'm not suggesting you do, but just an easy way to understand when I'm talking about these implied volatility numbers on the Thinkorswim platform. Okay, February 17th, so you're going to next Friday. If you want exposure to next Friday, you have implied volatility in this market of about $4.25 for Tyson Foods, okay? They have their numbers, though, today after the bell. Well, folks, of the $4.24 that's implied volatility, if you hold those options through this week and next week, $3.62 of that. Now, all these numbers I'm talking about are as of the close of Friday, okay? Options don't trade unless during market hours. Better way to say that is options only trade when the market is open during market hours. So you're going to see all of these numbers reset at 9:30 when the options open. But as of Friday's close, okay, basically all of the volatility for the next 2 weeks is priced into the numbers that we're getting today after the bell. You subtract 424, you take 424, subtract 362, you're talking about basically 60 cents of volatility for a 64-cent stock. Now, Tyson, not a very volatile stock compared to some of the rest. But as you see, all of that volatility priced into that event taking place tonight. Tyson will have their numbers as well. What else do we have? We have Spirit. We have Simon Property Group. They'll be out with their numbers. Talk a little real estate. Malls. Simon, you're looking at about a $4.64 move. For Simon, talking about $130 stock. All right, let's jump to tomorrow because this one's an interesting one. We got Chipotle. Chipotle Mexican Grill. With their numbers, man, quite a stock. You back this thing up, too. I was looking at it, that whole, what was the scare they had in terms of the contamination of their restaurants going on? E. coli, I think it was. You have the stock trade from 766 down to 247 was where we got in the beginning of 2018. There you see the COVID volatility. Talk about a short-term pause in the run-up. Yeah, quite a buyout, man, in terms of if you were able to pick any part of that move lower for the E. coli. And yeah, you dive to 1958. You pull back last year to 1,200 and change. We're already back to 1,700. We jump back to that Analyze tab. They're out with their numbers tomorrow. About a $100 move for Chipotle. And if you want action throughout Friday, you're talking about a $108 move. Always interesting to see when I'm pulling things up. Last time I looked at these on the Thinkorswim platform when I was just playing with some theoretical trades, it keeps them up sometimes. February of 2022, a year ago. Yeah. Nonetheless, you're talking about almost a $100 move for their numbers tomorrow for Chipotle. What else do we get tomorrow? We got Hertz. We get Royal Caribbean. Let's check out Royal Caribbean. They're going to have some volatility, I imagine. Yeah, not too dramatic. Only about a $3.50 move for, only about a $3.50 move. And you're talking about a $68 stock at a time when this thing is just volatility everywhere, man. You want to talk about volatility. I was talking about Carvana recently, and yeah, this thing, man. You talk about volatility, right? Is the meme craze going again, folks? Because Carvana down to $3.55. You chop around for a while. You accelerate from about $4 up to 20. Already we're back to $14.55. I'd steer clear of this one, folks, unless you have some risk capital that you can lose entirely. Because we're talking about shorting this. First of all, if you want to be in the likes of the Wall Street traders that all went BK because they were shorting stocks that they thought they could cover for, and meanwhile the meme craze defied any logic, right? So you short something with undefined risk, you're playing a game I don't want to play. because I don't want to have undefined risk when you're playing with stocks that can go from $4 to 20 in a heartbeat. We know that they can go to 400 in a heartbeat in the same way. Then the next thing you do is you say, okay, well, maybe I can trade it with options. Well, if you trade it with options, folks, okay, let's just take a look. Yeah, check it out. This is the problem with trading it with options. And you can do it both ways, okay, as in you can be the one buying and selling this volatility premium. Now, these were the numbers as of the close on Friday. As I said, it's going to reset again when we come back for the open. In less than 4 minutes, we'll get that opening bell. But yeah, you're talking about just exposure through Friday. Again, these were as of Friday's close. Almost a $4.50 move of implied volatility for a $14 stock, folks, okay? I mean, you're buying a put at the market on Friday, and you're paying 15% for 5 days of action, and you got to be directionally correct. Doesn't mean you can't make money, man. But boy, that might be a tough one, to put it lightly. We'll talk a little bit about that. We'll see how they open. Going to be an interesting Monday, I assume, folks. We got volatility to kick things off. We got more earnings to go over, folks. Stay tuned. I'll be right back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at an S&P down about 23 points. A little bit of a lift on the opening bell right now. NASDAQ 100 catches a little bit of a pop. We're negative by 0.75%. We got the Dow off 98. We got the Russell off by 12. We jump around to some of the equities with action last week. Thursday, man. Amazon, how about their numbers, right? From 117 on the spike high on Thursday. Yeah, now these are 30 minutes. Now let me put it back to a 15-minute for a little bit more clarity. There's your acceleration on Amazon. Now, it was interesting on Friday morning, following the numbers from Amazon, Apple, and Google Alphabet on Thursday, they all opened in negative territory. But boy, you had a sell-off on Amazon. Okay, so Amazon goes from about 106 down to about 102. Quite the dichotomy when you look at Apple. Because look at the charge higher on Apple. Apple comes into the opening bell at about 148, right? Down from 150, and the market spoke in a big way up to 157, man. Whew. Today, you're down 1.3%, though, for Apple shares. Amazon, actually in the positive. A little bit of a divergence across the board. Google, they got an acceleration a bit like Apple, nothing like what Amazon sold off. They did finish the day in the red. Today, they're in the red again by about 1.7% for Google shares. Now, I talked about companies. We're going to keep going over some of the companies with earnings. The other thing to keep your eye on, folks, Chairman Powell. So as I mentioned, he is going to be speaking. He's going to participate in a question and answer session at the Economic Club of Washington, D.C. That's going to take place at 12:40 p.m. Eastern Time tomorrow. And has consistently suggested that the Fed is set for at least 2 more rate hikes out there. Now, the numbers in terms of what they're pricing in right now in terms of, you're looking at almost 100% chance of another 25 basis point hike, okay? From the words that Chairman Powell was talking about at his press conference, they're not done hiking. The real interesting part is right now you're pricing in, I think, around like a 2/3% chance, about a 67% chance that maybe you get one more 25 basis point hike in May. That's the one that's going to be up in the air. And that's the meeting that's going to get especially interesting in terms of how the market prepares itself heading into that May meeting of the Fed. And check out this market. A little bit of a lift at the opening bell. 41.29 right now in the S&Ps. Okay, jumping back to some of the other equities we had going on with their numbers. So getting into the numbers on Tuesday, we had talked about Chipotle. Other companies, you get Royal Caribbean, we get VF Corp, Western Union. Jumping into Wednesday. All right, now, a couple big ones on Wednesday. We get CVS out with their numbers. CVS today up about 0.4%. We take a look. 5-year weekly on CVS. Down from 111 last year. And boy, it's been a quick run for CVS from 104 as recently as in December. You're at $86 right now. They'll be out with their numbers on Wednesday, and you're looking at about a $3.31 move. It's always interesting, folks, and that's why I say, if you haven't checked out the program Fast Market, I know I'm biased. TD Ameritrade, Thinkorswim, they are a sponsor. But if you don't even trade options, folks, understanding what they're talking about, understanding how options are priced, how implied volatility is calculated, what the implied volatility is for equities you're trading going into, earnings events of any kind, that's a pretty low volatility event for CVS. $3.27. You're talking about an $85 stock. What's that? 4% maybe priced into the equity for their numbers. You take a look at the weeklies, and you're talking about for the entire week only $3.74 for CVS. So they are out with their numbers Wednesday. The other company we get on Wednesday, it's going to be a big one. Where am I? Excuse me. Disney, of course. I thought so. Yes, Disney out with theirs. A couple. We got Uber as well. Let's jump. Disney numbers, you're talking about a $6 move. Now, Disney's going to have some interesting ones, man. This will be the first earnings call where you have Iger back in control of Disney. Be interesting to see what he has to say. You take a look at Disney, quite a rebound recently, up to about 110. You were just up to 113 last week before you sold off a bit. And yeah, I mean, you're coming down to areas, man, pretty interesting. COVID lows, $80. Pretty interesting, right? You have a company that operates basically in movie theaters and in amusement parks. Now, Disney Plus is the outside dark horse in there that allowed this thing to run to 203. But not many would have thought, folks, that you run up to 203 during a pandemic when you operate in movie theaters, you operate in business parks, and then, boom, you give it all back. You trade down to a price point of $84, folks, basically right down to the lows, man. You got a couple tails there, okay? But you're talking about, an open there of $84 on that bar. And where do we just get to? 87, 83 for Disney. So Disney, they'll be out with their numbers. And, yeah, you're talking about a $6 move for a $110 stock. The other company we get is Uber on Wednesday after the bell as well. Yeah, and there's an implied move that you like to see if you're selling volatility, folks. That's a 9% move, excuse me, for Uber. They're out with their numbers after the bell on Wednesday as well. And so you're looking at about a $3 move. And yeah, this thing breaking out. We've been in a downtrend channel. You know, maybe you take out the bottom part of 2022 in there. But boy, it's quite a trend to the upside. We're off the lows of $20 that we were in the middle part of last year. You're at $33.10 for the price of Uber shares. And then you fast forward to Thursday, we get Lyft out with their numbers. Yeah, a little bit of a different story, man. Well off the lows of 966. You chopped around well off the lows of the better part of last year at 1680. You jump over to the Analyze tab. Yeah, there's some volatility for you, man. What's that? 11, 12% move priced in. And this is where it's important to know, folks. If you're an equity holder for Lyft, are you prepared for a double-digit percentage move in either directions? Because that's what the market's implying right now, just for the numbers that will be out on Thursday with Lyft. Other numbers we get on Thursday as well. You get Kellogg. I had a couple. Under Armour out with their numbers as well on Thursday. We get Yelp numbers on Thursday. Canopy Growth. That's the one I want to look at. Yeah, you talk about a fall from grace, man. Now, I wouldn't be touching this thing, folks. It's a $2.90 stock. You're off the lows at $2.09. This whole industry, interesting how it happens. I've talked about it before. I got many friends, whether it's in Florida, whether it's in Massachusetts. Two slightly different industries. In terms of Massachusetts, you have medicinal and you have recreational. And in Massachusetts, you're allowed to grow your own cannabis. In Florida, just medicinal. But we do have True Leaves everywhere in here. We got a bunch of different ones. But the whole industry is a race to the bottom, folks. Basically, it's all come to, as many had stated, it's a plant you can grow in your backyard. In Massachusetts, many people are. It's a race to the bottom, and you have prices that are plummeting for the price of that flower, making it very difficult for these companies to profit to any extreme degree. And you're seeing it in Canopy, you're seeing it across the industry, and you're seeing it in the volatility. I mean, yeah, that's an 11 to 12% move potentially priced in for a $2.88 stock. But I'd be very careful, folks. If you do want any exposure to cannabis, I would much prefer getting into a company like Constellation. You got a bunch of booze behind you that's never going away, okay? And there's a chart of Constellation, man. You talk about holding up well, right? This thing's been sitting in a consolidation of 220 to 240 for over 2 years, folks. All right, we back it up even further to a 5-year weekly. You see the drop-off during COVID, like somehow people weren't going to drink again, although they got hammered hard because they made Corona. And at the beginning, everybody was talking about the coronavirus. You had Constellation trade from 207 to 104, just like that. And you're sitting at 231, and they do have exposure to Canopy. Not sure that will ever pay off for them, but at least you got a little bit of exposure at the same time that you're locked into some good brands. Modelo, Kim Crawford, Corona. Stay tuned, folks. We got a lot more to talk about. It's Monday. We got markets in negative territory. We'll be coming right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're jumping over to a little bit of dollar and yen action. And boy, you look at it, man, this could be the break, right? You talk about a trend line, you back it up to where this thing. Now, we got two. It's always interesting in terms of the uptrend channel in the dollar yen. Okay. That was having to do with dollar strength, yen weakness. We've seen that reversal leading to dollar weakness, yen strength. We've seen a break in both directions, man, and that's being extended today. Now, we had the Friday action from the jobs number, from the dollar index, from yields in our markets and abroad, driven mostly by our strong jobs number on Friday morning. You see that spike on Friday from 128 in the yen up to 131. And today we're up even higher. And that one, a little bit of a different story here. That one talking about in Japan, the yen weakened after the Nikkei reported that the government had approached the Bank of Japan deputy governor, Masayoshi Amamiya, about succeeding Kuroda as head of the central bank. The government has refuted that report. Buy into this what you may. Investors assume a greater likelihood of the current ultra-easy monetary policy enduring if one of its architects succeeds Kuroda. It would make sense, folks, all right? Now, we've talked to our man Teddy Kegstad every Wednesday. We're going to talk to him this Wednesday, man. He puts out an outstanding report every Monday, folks. You can check it out right now for the Tiger Forex report on the front page of TFNN. He's been talking about, you know, they're not going to do anything crazy until maybe the next person steps in. Who's that going to be, right? Are they really going to go on a hiking path? They're probably going to have to at some point, but inflation nowhere near as pervasive in Japan as it is here, maybe in Europe, and they're staying the course right now with lower rates. Maybe they're waiting for a new governor for their Bank of Japan, but if you got the deputy in there, who's one of the architects of the ultra-easy monetary policy, as Bloomberg puts it, it would make sense that they would potentially be pushing to that level in terms of what they're talking about. Yeah, be interesting to see how that goes. But nonetheless, there's your reaction on the yen up to 132.48. We got markets basically sitting right where we started the day. And you got the dollar index at 103.41 right now. We take a look a little bit longer term index on the dollar, and that's, you know, basically a complete inverted chart of what the yen looks like. And quite a spike we've gotten on a couple occasions here. We'll see if that trend holds, but you're off the lows of about 108. You're up $2.50 right now. Pretty remarkable move over 2 days in the dollar index, but we've seen it everywhere. Yields, dollar index, as well as markets, of course. Checking out some of the other companies with their numbers, we jump over to Under Armour. They'll be out with their numbers. This thing's been on quite a run, man. From October, you're at $6.85. We're up to $12.35. Taking a little bit of a longer-term look, though. Yeah, you still got a long way to go, folks, all right? This thing's doing roller coasters in both directions, and percentages on small numbers can be deceiving. You might be thinking, that's great. They've made 100% if you cherry-pick the low. Well, the other way to saying that, folks, is if you bought Under Armour at any point in the year 2021 and you bought it on margin, you probably have no money left still at this price, Okay, so there's ways to say everything in different ways. Taking a look at the Fibonacci number in terms of where this thing is, just kind of taking maybe the top of these three levels of where we spiked to about $26 on Under Armour. We're $12.39, maybe $14 gets you some action on the 382. They're out with their numbers on Thursday. And yeah, as you'd expect on a stock that's struggling to stay alive, almost a 10% move in either direction for Under Armour. As I mentioned, we got retail, right? What else do we got? Oh, we got Expedia. Let's check out Expedia on Thursday. Yeah, it's a big week of earnings again, man. Expedia, you talk about this stock, man. I mean, quite the January, folks, okay? But check out these charts when you put it on a yearly, right? I mean, I'm talking about weekly going back years. You just look at January. Let's just look at January. Let's go back 20 days. Boy, we're all heroes, man. From January 10th alone, Expedia is up 33%, okay? But context is important, as it usually is, because if you take the context of where we've been, yeah, we're clawing back, man. But boy, you want to see some scary stuff, right? You start doing 382s of where we were just a year ago, folks. Okay? And you're still not even at the 382, which is kind of where you chopped around at. It's always interesting when you see a consolidation area back in the chart that correlates to the 382. It's an area that you could see that pause, and we're coming right into that area. We just traded to 125, and that area is at about 128 for Expedia. They're with their numbers, though, and you're looking at about an $8.80 move for a $120 stock for their numbers on Thursday. Yeah, what else do we got? We got Ralph Lauren. Speaking of retail, $123 stock, $8.67. They'll be looking for their numbers on Thursday. Ooh, you talk about a run, man. Decent action coming up to the highs of about 130. You're trading at 123, down 2.1% right now for Ralph Lauren. Let's see how some of the FANG stocks are trading, coming off quite the action last week. You got Amazon shares basically flat, down about 1/10%. Talk about a run for Apple, man. Apple giving back some of those gains, off about 1.2% right now. We jump over to Google shares. Google off about 1.2%. Let's see how Tesla's doing. Man, Elon had himself a win. When did that come out? Did that come out Friday after the close, I think? I didn't follow the trial. It's really not that important to me, folks, but it is interesting that you can have the CEO come out and say funding secured, and somehow people trade off that information and no harm is done. Not sure that's how it's supposed to work. And that is of my simplest understanding of all things. But, you know, I've said it before, and here's the difference, right? You own a business, you can say whatever you want. You kind of make a deal. When you go to the public markets for money, okay, if Elon wanted to run Tesla however he wanted to run it, regulators, government, they don't get to say anything, okay? But when you are taking people's money for ownership of your company, the only way that that whole market exists, okay, is if we all understand that information has to be as equal as possible. And I say as equal as possible. It's supposed to be fair, right? Everything. Fair dissemination. Nobody gets information before anybody else does. Nonetheless, you get the point, right? These are two different worlds, and they constantly get merged in saying, you know, oh, he can say whatever he wants. Folks, you can't go to the public and say, taking the company private at X price, funding is secured, and that's not the truth, and people trade off and they get hurt. I think it's a bummer that happened. Doesn't mean you should go to jail, but financially, man, I don't understand how you can make those claims as a CEO. He's a brilliant man. He obviously understands what he's doing. Do you think he did not understand what the market was going to do with that share price when he put out that tweet? Do you think he did not understand what was going to happen 5 years ago when he said, I have funding and I'm taking the company private at an astronomical price at that time? No, of course he did. So, yeah. Yeah, and maybe they did say it is confirmed, but I would imagine that, anyway, for what it's worth, man. Tweeting by handshake-esque deals in terms of funding secured. If the funding was secured, then why didn't they go private at 420? I agree. Why didn't they go private then at that price if the funding was secured? Because it was well over the price it was trading at, wasn't it? They gave it back pretty quickly. So I guess and they're saying in the den, I appreciate several folks testified the funding was confirmed to back up that statement. That's why it was such a quick verdict. Did they say why, if funding was secured, that it didn't happen for investors at the time? So that seemed like a heck of a deal at the time. Nonetheless, markets down about 24 points, folks. Jumping over to the NASDAQ. You get a little bit of a pop on the open right now. NASDAQ only off about 0.6% right now. How about that crude price? 73.68. You jump over. Some of the crude stocks, Chevron down about 0.3%. We're going to talk a little bit of gold when we get back in. Newmont trading a bit lower. Yeah, they're going to be buying Newcrest Mining. Newmont down about 4% on that acquisition, trading at $47.91. Stay tuned, folks. One more segment. Right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the market pretty much where we kicked off the program right now. You got the S&Ps down about 26. There's Newcrest Mining, I believe. They're up 14% right now on Newmont. Going to be taking them out. Newmont market not really liking the acquisition price, I guess, as you got Newmont down about 4.5% on that news so far this morning. We jumped to the gold contract. Gold up about $8. Quite a sell-off recently as I take it out. I mean, you look at that chart, man. When you get runs, folks, from 16.18 up to a price point of 1975, what are we talking about? Almost 400. You're talking about almost a 25% run over the span of about 2 or 3 months. Be careful. As I mentioned, my dad, new issue of the Gold Report coming out this morning. It may already be out usually. Gold Report. Check it out, folks. Every newsletter we do at TFNN, folks, please try it out. You try it for 30 days. They all come with a money-back guarantee for new subscribers, okay? You cancel it, it's great. We appreciate you trying it out. There's no wrong feeling with canceling it. People sometimes say, I don't feel comfortable asking for my money back. Folks, that's why we put it there. Please try the letters, try them all. If you don't like them, it's not for your fit. Get your money back guarantee if it's not something you're going to use, and you move on to the next one. That's why it's there. It's a beautiful thing. And we'll end the program, folks. Send some prayers, send some white light out to the people of Turkey and Syria, because I imagine the headlines are just going to continue to get it worse. You know, for all the divisiveness, unfortunately, and it's easily said and done, right? That goes out there, man. Remember how beautiful we have it in life, folks, because, boy, on the other side of the world right now, there's some hardships going on. You take a look at some of these pictures. You're talking about skyscrapers, collapsed to rubble, folks. It's going to be a bad deal. That's going to come out. You talk about neighborhoods just reduced to rubble across the board on almost an 8 earthquake, and communications down, making things hard to save people out there. So remember how good you have it sometimes. And it's tough. It's tough to do because stress builds, anxiety builds, life's responsibilities build, but try and keep things in context, S&Ps, folks, thanks for starting your Monday with me. Thanks for starting your week with me. Stay tuned. We got our man Basil Chapman coming up. We got our man Steve Rhodes. We got Fast Market at 12. Larry Pesavento, Dave White, my dad, live from 3 till 4. Thanks so much, folks. Stay tuned. We got the S&Ps down by 25, pretty much where we kicked off the program. Pretty lofty prices right now in those S&Ps, negative by 0.6 to start things off. Stay tuned, folks. Basil's up next. Have a great Monday. We'll see you tomorrow.